Good morning. Today, we're diving into the story of a company that's not just making headlines, but actively shaping the future of transportation on a global scale. When we talk about the future of driving, one name that stands out is BYD, Build Your Dreams. This isn't just a catchy slogan, it's a mission that has propelled BYD from humble beginnings to the forefront of the electric vehicle revolution. In cities around the world, BYD's presence is growing, and its vehicles are becoming a common sight on busy streets. BYD's journey began in 1995 as a battery manufacturer, focusing on rechargeable batteries for mobile phones and other electronics. This early expertise in battery technology gave BYD a unique advantage when it entered the automotive industry. By mastering the most critical component of electric vehicles, the battery, BYD was able to control a crucial part of its supply chain, ensuring quality, innovation, and cost efficiency. Today, BYD produces a wide range of electric and hybrid vehicles, from affordable city cars to luxury models, and has even surpassed Tesla in quarterly sales. Their lineup includes everything from compact sedans and SUVs to electric buses and commercial vehicles, making BYD a versatile player in the market. This diversity allows BYD to reach customers from all walks of life, whether they're looking for an eco-friendly commuter car or a high-end electric experience. Its rapid rise reflects not just company ambition, but China's drive to lead in green technology. The Chinese government has heavily supported the development of electric vehicles, seeing them as a key to reducing pollution and achieving energy independence. BYD's success is a testament to how public policy and private innovation can work hand in hand to transform an industry. BYD's cars are now seen worldwide, symbolizing China's manufacturing strength and the shifting global auto industry. From Europe to South America, and even in parts of Africa, BYD vehicles are making inroads, challenging established brands and changing perceptions about Chinese automotive quality. The company's global expansion is a clear sign that the electric vehicle race is no longer dominated by just a handful of Western companies. The company's innovations, like the Blade battery, have set new industry standards for safety and durability. This breakthrough battery technology is designed to be more resistant to fire and damage, addressing one of the biggest concerns consumers have about electric vehicles. BYD's commitment to research and development has helped it stay ahead of the curve, constantly pushing the boundaries of what's possible in EV technology. BYD's moves ripple across the automotive world, with investors and governments watching closely. Every new product launch, partnership, or technological breakthrough from BYD has the potential to influence global markets and set new trends. Industry analysts often look to BYD as a bellwether for the health and direction of the electric vehicle sector. Its performance is a barometer for the EV market, especially in China. As the world's largest auto market, China's embrace of electric vehicles is crucial, and BYD's success is often seen as a reflection of broader industry trends. Investors track BYD's stock closely, knowing that its fortunes are tied to the future of clean transportation. That's why recent news from BYD has sparked intense discussion about the future of electric vehicles. Whether it's a new model launch, a major export deal, or a technological breakthrough, BYD's every move is watched by the world. As the company continues to innovate and expand, it's clear that BYD is not just following trends, it's setting them and redefining what's possible in the world of electric mobility. On September 4, 2025, news broke that BYD was slashing its sales outlook for the coming year. According to Reuters, BYD's leadership made this significant cut after several internal downward revisions, signaling a tougher market ahead. The decision was carefully communicated to key insiders and suppliers, preparing them for a slowdown. This move raised immediate questions about the health of China's auto market and the viability of smaller EV startups. The era of easy, exponential growth for EVs may be ending, replaced by fierce competition and a fight for profitability. Let's look at the numbers in detail. BYD's original 2025 sales target was an ambitious 5.5 million vehicles, a figure that reflected their confidence in the growing electric vehicle market. However, the new target has been adjusted to 4.6 million vehicles. This represents a significant 16% cut, translating to 900,000 fewer cars than initially planned. For BYD, this is a massive shift. To put it in perspective, this reduction is larger than the total annual sales of many other automakers. This isn't a sudden change, it's the latest in a series of downward revisions. These adjustments reflect persistent market headwinds and challenges that have been building up over time. The impact of this adjustment is huge. Fewer orders for batteries, chips, and parts will ripple through the supply chain, affecting suppliers across the industry. Many suppliers had ramped up their capacity based on BYD's earlier optimistic forecasts. Now, they face the challenge of adjusting to the new reality. This adjustment is more than just a number. It's a signal for the entire electric vehicle ecosystem to recalibrate and reassess their strategies. The industry must now adjust expectations and business plans accordingly. This shift will likely lead to a reevaluation of growth strategies and market approaches for many companies involved in the EV sector. The market's reaction was swift. BYD's shares dropped over 2% in Shenzhen. This immediate decline was a clear indicator of the market's sensitivity to the news. Investors were quick to react, selling off shares in a bid to cut their losses. And Hong Kong, erasing billions in value. The financial impact was not just limited to BYD, it rippled through the entire market. Analysts were seen scrambling to update their forecasts and reassess the situation. Investors, long bullish on BYD's growth, were forced to reconsider their optimism. The sudden downturn made many question the sustainability of BYD's previous growth trajectory. Meetings were held, and strategies were reevaluated. The sales cut challenged the narrative of unstoppable expansion. For years, BYD had been seen as a beacon of growth in the automotive sector, but this news cast a shadow of doubt over its future prospects. The shockwaves spread beyond BYD. China's CSI 300 index fell 2.1%. This broader market reaction highlighted the interconnectedness of the financial markets and how a single company's performance can influence wider economic indicators. And Hong Kong's Hang Seng dropped 1%. The decline in these major indices underscored the gravity of the situation. Financial news outlets were abuzz with discussions on the potential long-term impacts. Investors worried that BYD's struggles signaled broader issues in China's economy and manufacturing sector. Concerns grew that this might be a harbinger of more widespread economic challenges. The news triggered a wider market sell-off, as caution replaced confidence. Traders around the world were seen frantically placing sell orders, trying to mitigate their exposure to the sudden downturn. BYD's announcement became a catalyst for re-evaluating the outlook for China's high-tech industries. Analysts began to question the robustness of the sector and whether other companies might face similar challenges. A single company's decision had global financial repercussions. The interconnected nature of today's financial markets means that news from one company can have far-reaching effects, influencing investor sentiment and market dynamics worldwide. BYD's sales cut is rooted in China's hyper-competitive EV market. Government support has spawned hundreds of domestic brands, making every sale a battle. Startups like NIO and Xpeng compete with giants like Geely, while tech firms like Huawei and Xiaomi add to the chaos. Relentless price wars mean automakers must slash prices to win buyers, squeezing profits. For BYD, defending its lead means fighting on all fronts, from budget to luxury segments. Every competitor benchmarks against BYD, intensifying the struggle for market share. In this crowded arena, rapid growth is no longer guaranteed. Price wars have taken a toll on BYD's profits. The company recently reported a 30% drop in quarterly profit, a stark reversal from its record highs. High production costs combined with falling prices have squeezed margins to the breaking point. Chasing volume in a discount-driven market risks profitless prosperity. BYD's new sales target signals a shift focus on sustainable, profitable growth over sheer volume. The EV industry faces a dilemma. Scale brings lower costs, but competition erodes profits. BYD's experience is a warning. Scale alone isn't enough if margins disappear. The company must now balance growth with financial health. Comparing BYD to Tesla highlights key differences. BYD dominates China with affordable models, but Tesla's global brand and premium focus give it higher margins. Tesla's direct sales model and software edge provide financial flexibility in price wars. Tesla's global reach insulates it from regional downturns, while BYD remains heavily reliant on China. BYD's broad product range exposes it to brutal price competition, especially at the low end. Tesla faces its own challenges, but its premium positioning has proven more resilient. BYD's struggles underscore the unique pressures of China's EV market. BYD's forecast cut signals a strategic pivot. The company is shifting from growth at all costs to a focus on profitability and sustainability. International expansion is now a priority, targeting less crowded markets in Europe, Southeast Asia, and Latin America. BYD will likely push higher-margin premium models, leveraging sub-brands like Yangwang and Fengchengbao. Brand building and customer experience will be key to competing with established luxury automakers. Technological innovation remains central. BYD's battery expertise and vertical integration are critical advantages. The company aims to control costs and protect margins amid market pressures. This recalibration is about building a stronger, more resilient BYD for the future. BYD's 16% sales cut marks a turning point for China's EV industry. The era of unchecked growth is over. The focus now is on sustainable profitability. BYD's move signals industry maturity and a shift toward consolidation. Stronger players may acquire weaker rivals, while some startups will exit the market. This shakeout, though painful, will create a healthier, more stable industry. The global EV race is more dynamic and competitive than ever. BYD's strategic shift could set the stage for long-term resilience and leadership. How BYD navigates this new chapter will shape the future of mobility worldwide.